Something unusual's just happened on the XRP Ledger. One widely reported metric shows active addresses jumping from around 47,000 to more than 356,000 in just 2 weeks. That is an increase of roughly 655%. And look at the timing. XRP's just experienced one of its strongest rallies in a long time. RLUSD has reportedly crossed $2 billion. Ripple is backing new institutional lending infrastructure around the XRP ledger, and tokenized financial assets are increasingly becoming part of the XRPL story. So, is this finally evidence of the huge adoption XRP holders have been waiting for? Well, not necessarily. Because when I started digging into that 655% number, I found something important. And I think the biggest story here isn't actually the number of addresses, it's what the XRP ledger itself appears to be turning into. Before we get into it, welcome back, I'm Paula. On this channel, we look beyond price charts at what's actually changing across crypto, regulation, and the financial system. So, if you enjoy that kind of research, hit the like button, subscribe to the channel, and let's get into it. The first thing we need to establish is where this 655% number actually comes from. The figures being widely reported come from sentiment data and show active addresses rising from approximately 47,180 on August the 10th to 356,070 on August the 24th. On paper, that's enormous, but we need to be very careful with the word active, because this doesn't mean that 356,000 new people suddenly started using XRP. One person can control multiple addresses. Exchanges can interact with huge numbers of addresses. Automated systems can generate activity. And analytics providers can measure network activity differently. So I'm absolutely not comfortable turning this into the headline, 356,000 new XRP users just arrived. We simply don't have evidence for that. But I'm also not dismissing the spike, because something clearly happened and the timing is fascinating. XRP itself's just gone through an extraordinary period of market activity. We've seen a major price rally, huge derivatives activity, and traders repositioning aggressively. And whenever price suddenly comes alive, the network can come alive with it. People send XRP to exchanges, withdraw it, move assets between wallets, exchanges rebalance liquidity, and automated trading systems become more active. So there's a perfectly reasonable possibility that at least some of this address spike is a consequence of XRP's market activity, rather than evidence that hundreds of thousands of completely new users suddenly discovered XRPL. That distinction matters because it's very easy to look at a chart like this and create a simple narrative. Network activity explodes, therefore adoption is exploding. Therefore, XRP must go higher. But those three things don't automatically follow each other. What I want to know is what is actually happening on the network, and that is where this story becomes much more interesting. For years, most people have understood the XRP story through payments. Banks need to move money internationally. Traditional cross-border payments have inefficiencies. Ripple builds payment infrastructure, and XRP potentially provides liquidity between different currencies. That story hasn't disappeared, but look at what's being built around XRPL now. We have RLUSD, Ripple's dollar stablecoin, which has reportedly crossed $2 billion in market capitalization. Ripple is positioning RLUSD across payments, settlement, and institutional financial activity. And now we're beginning to see credit enter the picture as well. Ripple is backing an institutional credit initiative involving Clearpool and Cicada partners, designed to provide working capital loans denominated in RLUSD to fintech and payment companies using infrastructure being built for the XRP ledger. There's an important caveat here. This isn't fully live on XRPL mainnet yet. The lending protocol and single asset value functionality it needs are still going through the network's amendment process. So I'm not going to present this as billions of dollars of institutional lending already happening on XRPL. It isn't. But the direction of travel is what interests me. Because look at the pieces that are starting to appear. Payments, stablecoins, tokenized assets, liquidity, and potentially institutional credit. That's a very different proposition from simply use XRP to send money from A to B. Tokenization could become an especially important part of this. Tokenized Treasury products have already come onto XRPL, and Ripple has been investing in infrastructure around custody, tokenized assets, collateral, and settlement. And if you're going to build financial markets on chain, you need more than the asset itself. Imagine putting a treasury fund onto a blockchain. Great, but what do you buy it with? How do you settle the transaction? Where does the liquidity come from? Can the asset be used as collateral? Can participants borrow against it? Suddenly, a stablecoin like RLUSD becomes more interesting because it can potentially provide the cash side of that financial ecosystem. And that brings us to the question I think XRP holders should actually be asking. Does all of this necessarily benefit XRP? Because it's incredibly easy to say RLUSD grows, therefore bullish XRP. Tokenization grows, therefore bullish XRP. XRPL activity grows, therefore bullish XRP. But those relationships aren't automatic. XRP is the native asset of the XRP ledger. XRPL accounts have XRP reserve requirements, and transactions destroy a small amount of XRP as a fee. But the current base reserve is just 1 XRP, and the minimum cost of a standard transaction is just 0.00001 XRP. Those fees are intentionally tiny, so transaction fees alone are not a convincing explanation for why trillions of dollars of potential XRPL activity would necessarily create enormous XRP demand. The potentially much more interesting role for XRP is liquidity. Imagine XRPL eventually contains dollars, pounds, euros, RLUSD, tokenized treasuries, funds, and all sorts of other digital assets. Those assets need markets, and they need efficient ways to move between each other. If there's already deep direct liquidity between two assets, XRP doesn't necessarily need to sit in the middle. You could potentially exchange RLUSD directly for another tokenized asset. But here's where XRP becomes interesting. Because XRPL already has something called auto bridging built into its decentralized exchange. When two tokens are being exchanged, the ledger can use XRP as an intermediary when routing through XRP provides a better rate than trading the pair directly. You might have one market between asset A and XRP and another between XRP and asset B. And XRPL can use those markets to help complete the exchange. This isn't a theoretical future feature, it's part of how XRPL's DEX works today. And I think that gives us a much better XRP question. As more assets potentially come onto XRPL, does XRP develop enough liquidity to become the efficient bridge between them? Because simply adding more assets to XRPL doesn't guarantee that every transaction uses XRP, but a larger, more diverse financial ecosystem could potentially create more situations where an efficient intermediary asset is useful. Whether XRP actually captures that role depends on liquidity and how these markets develop, not simply the number of tokens issued on the ledger. Which leads to a slightly uncomfortable question. Could the XRP ledger become extremely successful without XRP succeeding to the same degree? Potentially yes. And I don't think saying that is bearish on XRP. I think it's simply separating the success of a network from the economic value captured by its native asset. If RLUSD became enormous, billions of dollars of tokenized assets came onto XRPL, and institutions increasingly used the ledger for settlement, that would clearly be significant for the ecosystem. But it doesn't automatically follow that every dollar moving through that ecosystem creates equivalent demand for XRP. What matters is how XRP is actually used inside it. Does it become an important liquidity bridge? Do deep institutional markets develop around it? Does auto bridging increasingly route transactions through XRP because that's genuinely the most efficient path? Does XRP provide useful liquidity between assets or even between different financial systems? Those are the things I think become much more important to watch than simply counting transactions. And that brings us right back to this enormous 655% address spike. I'm not interested in it because I think 655% more active addresses means XRP should go up 655%. That's not how this works. I'm interested because it gives us another reason to look underneath the surface and ask what kind of economic activity is actually developing on XRPL. If this spike disappears as quickly as it arrived, that's useful information. It tells us that much of the activity was connected to the extraordinary trading environment around XRP. But if activity remains elevated after the price volatility settles, while RLUSD continues growing, tokenized assets expand, and new institutional financial products actually start operating on the ledger, then we have a much more significant story. Because the XRP Ledger may be going through a transition from being viewed primarily as the blockchain associated with XRP and Ripple's payment story towards something much broader: infrastructure for tokenized financial activity. Whether that transformation ultimately creates substantial additional value for XRP itself is still an open question, and I think we should still keep it that way. Adoption shouldn't be measured by one partnership announcement, one percentage on a chart, or 1 week of price action. Eventually, it needs to show up in persistent usage, real assets, real liquidity, real transactions, and real economic activity. So yes, XRPL active addresses reportedly just jumped around 655% in 2 weeks. That's the headline. But the question I'm much more interested in is what happens when that headline disappears. Does activity fall straight back down? Or are we watching the early stages of a much broader change in what the XRP ledger is actually being used for? And perhaps more importantly, for anyone holding XRP, if XRPL does become a serious piece of financial infrastructure, how much of the new financial activity actually needs XRP? That's the question I'm going to keep digging into, and I'd really like to know where you land on it. Do you think the growth we're seeing around RLUSD, tokenization, and institutional finance ultimately strengthens XRP's role? Or could XRPL become hugely successful without XRP capturing the same level of value? Let me know in the comments. And if you want more videos where we actually dig beneath the XRP headlines rather than simply telling you everything is bullish, hit subscribe and I'll see you on the next one. Remember, this is not financial advice. Crypto assets are high risk and you could lose all the money you invest.